Thank you for joining me. I'm Alexandra and I want to talk about eBay today. So they do auctions-ish. Minor part of their business is auctions these days, but and no, they weren't the first. I guess their website was just better than the competitors, and it's the same to this day, which is just barely usable. But so they do mostly e-commerce these days, which is good, I guess. Current stock price $61, which gives them a market cap of $41.8 billion. Revenue is $10.3 billion, earnings $5.7 billion, which gives them a PE of 15 with a forward PE of 13. The $5.7 billion in earnings is not continuous operations though, so there's some other stuff in there. Obviously 60% net profit margin is just way too good to be true. Dividend yield just over 1% with a payout ratio of 18%, which is not terrible. Total assets $19 billion, total liability $16 billion, which gives them a total stockholders' equity of $3.6 billion, which is not even 10% of their market cap, but it's a company that runs a website, so there's not a whole lot of assets that they need. Risk factors, Amazon, I guess. There's not really a lot going on in terms of new risk factors, and I don't think that anything huge is going to happen. One of the problems I see is that they're kind of distancing themselves from auctions and just being a platform like Shopify, Amazon, whatever else. And so they are just one of many at that point. And so I don't really see the point of eBay existing in the first place, but that's a whole different issue. Overall, I would say for a growth investor, this is definitely not a growth stock anymore, and I guess they didn't really make it as far as they thought they would either. For a dividend investor, the dividend is not great, but the payout ratio is pretty nice. So if you really wanted to invest in this, I wouldn't blame you, but I think there's far better stocks out there. I would say Intel, IBM, PBCT, whatever else. For a value investor, the balance sheet doesn't look nice. The PE is currently nice, but I'm not sure if that's going to be the case going forward. Still, a PE of 20-ish, which is what they can realistically expect, is not terrible. And so with a balance sheet that's not quite as terrible as it could be, I guess. Definitely wouldn't blame anyone for investing in this company either. As I said, I personally don't think I will, because I don't really think that they have a niche anymore. And they're just one of many platforms where people can sell stuff these days. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.